What's happening, everyone? I'm Jordan, and this is Front Run Tech. And we've got a lot of fear and uncertainty going on in the markets right now. And of course, we know there's plenty of legitimate reasons for that. We are in very chaotic times right now. All right. So let's go ahead and look at the markets and see where we're at. I want to go ahead and start off here looking at oil. I'm sure everybody is aware of what is going on with oil. You can't really look anywhere without somebody talking about it. And oil is at some extreme levels. If we look at the chart here, it has been able to very clearly get above this 95 level and is holding above that and really extending even higher as it closes the week above 112. And if we come back, you can see where this level comes from. It only spent a brief amount of time above that level back around March of 2022, and then it was right back below. So that's why that is an important level, that 95 to 100, and we see oil screaming higher well above that level, and we'll just have to keep watching. This is probably the most important thing to watch right now for the markets, and it's going to be a big factor, and it'll continue putting a lot of pressure on the markets in the short term. So we'll just see what happens. Let's go ahead and stay looking at the macro to start off, and let's look at the US interest rates because the bond yields have also been climbing higher because of the war, because of oil. This is the 10-year. It's back pretty elevated. It hit all the way up to about 4.5%, came off a little bit, is now kind of finding itself. It's right now around 4.31%. And if we zoom out, this pattern right here looks very much like a Wyckoff accumulation pattern. You can see the lower lows, that sharp low set, and now moving back upwards. So we're going to have to see what happens coming up. If the 10-year and the rest of the bond yields keep climbing, it's just going to present more and more of a problem for the government and the economy, of course. So um, let's go ahead and take a look at Bitcoin. Bitcoin, of course, continues to be under pressure while it really just chops and consolidates sideways. All right. Um, Many people are expecting another leg down, but right now this does look somewhat like it could be a bottoming formation for Bitcoin, but you also, of course, could have another leg down. I want to go ahead and look at the bottom of the previous bear market because I feel like what we're seeing now looks very, very much like this elongated consolidation pattern of chop that we had near the bottom of the last bear market. And this dump down that actually set the bottom here, this did happen because of the FTX collapse, and I personally do think that Bitcoin was bottoming out here if it wasn't for the FTX collapse, but that's kind of a if and but scenario. So the FTX collapse did cause that bottom to finally be set, and then Bitcoin reversed pretty hard. So if we come back to where we are right now, you can see similar type behavior. Does that mean that we need another sharp plunge down to really set that bottom? Or are we potentially just in this boring time bottoming out period right now? We'll just have to see. We want to see a break of the black trend line, all right? That'll be the first sign that potentially the bottom is in. And we're not that close to that right now. So we'll see how this week goes. Let's go ahead and take a look at Bitcoin on the weekly because it's pretty interesting here on the weekly. When we look at the weekly chart, it's still kind of holding at this pretty solid horizontal level of support, but you can see the main ascending support trend line of the channel is still right below, right around 58,000. So that could kind of coincide with that one more dip lower. If it tests that trend line, that would be a very good place for a potential bottom. If we go ahead and throw on the 200-week moving average, Again, that 200-week moving average is just on a collision course right with that trend line. So that could be a great place if we do see another sharp dip lower, really get people scared coming into a test of both of those levels. And I would hope to see a bottom there if that does happen. All right. So that's pretty much what we're looking at with Bitcoin on the weekly chart. And then to end off with Bitcoin here, I just want to come to this Bitcoin daily chart that I've been posting quite a bit on X. And really, I could really just use this one Bitcoin chart to really know what to expect and what type of market that Bitcoin is in, because you can see Bitcoin, if it's still holding this horizontal level, which is the previous highs from the last cycle, as long as it's still above this level, it could potentially just be a macro breakout and retest of the previous highs, right? And we would get the confirmation on that if it continues to hold above and then goes on and breaks out from the trend line, okay? Now, if Bitcoin decisively loses this horizontal level and loses the previous highs from 2021, 2022, then it would be time to really change the way we're viewing Bitcoin over the next 6 to 9 to 12 months, right? And we would have to be prepared for potentially lower lows and a much longer process of bottoming out. So this is a very crucial level to watch, and this is the daily chart that I'm really focusing on that here, right? Now, let's go ahead and look at some other things here. Of course, we got to go ahead and look at gold and silver, because we'll look at silver first. Silver has actually had a major breakout. All right, it's been having quite a rough time ever since the very volatile local top is set, and it has now finally had a breakout of the downtrend. You can see on the breakout to end the week, it had a sharp pullback, perfectly retesting that trend line, and then ended the week bouncing off the test of that trend line. So it is looking to confirm that breakout. We would want to see silver go ahead and take out this previous high for the resumption upwards to really confirm that it is breaking out and trying to reverse. All right. If we look at gold, gold also has had a major pullback. It did put in this kind of local low that it looks like, at least with a double bottom type of pattern. It then made it up and perfectly rejected off the first descending trend line. But you can see on the pullback, it kind of tested the neckline of that double bottom and is bouncing. So it still looks pretty good for now. We would like to see the breakout of the first trend line and then a move up to the main trend line. All right. I was grabbing some gold on this dip, so I'm happy to see that it has recovered so far. All right, now let's go ahead and look at if you follow me on X, and you know there's a couple other things that I did buy the dip on. I'll kind of go ahead and look at those, some of my favorite stocks to hold. We have the Copper Miners ETF. I did buy the dip right around this test right here of this horizontal level. Copper Miners ETF also looking like a bit of a double bottom with a pullback to the neckline and a bounce so far. So it has had a sharp recovery. We'll see if it's able to hold or not. Also, one of my favorite stocks, UEC. UEC looks pretty good here because it actually came down to a perfect test of the main trend line, absolutely perfect, bounced from there, and then had a breakout of the downtrend, had a pretty severe retest of that breakout where it looked like that breakout might fail, and then ended up bouncing so far, looking like it is trying to confirm that breakout. So it does look pretty good for now. All right. Before we go ahead and end, we do need to take a look at the S&P and the NASDAQ and see where we're at with those. The S&P obviously continuing with a sharp pullback. Now, I've been talking about specifically like on IG and stuff, if you follow there, that once this level was lost on the S&P, that a move back up to the level was probably going to happen regardless if the S&P has put in a bottom or not, right? Because if we are staying bearish and the S&P wants to dive much lower, you would still probably get a move back up to that important level and then a rejection confirming the breakdown. And currently the S&P is kind of right at that make it or break it point, to where it's either going to clearly get back above that level, which would be pretty bullish, or you're going to see a rejection here. If that happens, then we've got to be looking at this next level down here around 61.40. And if we zoom out a little bit, that would be the last previous high before the tariff correction. So a move all the way back down to retest that last high would actually still be perfectly healthy in the medium to long term. So we'll see how it holds at this level this upcoming week. And if you look at the NASDAQ, it's going to be pretty much the same thing going on, right? The local bottom so far with a sharp move right back up to that level, and we're just going to have to see if it gets rejected here this week or if it's able to get back above that level. All right, but I have been buying the dip on some stocks, as I post mainly on X and on Instagram. So if you enjoyed the video and want to follow me for more real-time stuff, go ahead and follow Front Run Tech on the socials. You can find the socials in the links for the socials in the description of the video. And thank you guys.